Alright, so one thing you guys should know about me if you watch this channel is that I love buying dividend stocks, but unfortunately it's harder to buy dividend stocks whenever the S&P 500 is trading at all-time highs, and it feels like every stock in your portfolio has just gone up. But in February, I believe there's still some really good opportunities for long-term dividend-focused investors, and I'm going to be showing a few companies that I'm personally going to be watching very heavy in February. And hey, the best investment you can make in February is buying the Do Dividend Stocks Not Drugs merchandise, links in the description. Also, did you know that we have a channel shareholders chat on the Discord? If you ever support the channel financially or go that extra mile really to help out, you get added to this chat. Not only do you get a lot of behind the scenes action, you get to see how much I earn from YouTube every single month. You also get access to my monthly newsletter, which I've started doing, which essentially is I share one stock every month and I go really in depth on it and share the qualities that I like of the business that you may not have heard of. Just let me know on the Discord and I'll add you in. Thank you, and roll the intro.
Hello, I like money.
Alright, to start off, I think it's obviously important to mention here the investing software I'm going to be using for today's videos to show all the stocks here is dividenddata.com. It's the best investing software on the market, and if you really want to help the channel out, use my link in the description. I've had 72 people click on the link but not actually go through with the purchase, so thanks a lot, guys. Clutch up for me though. Alright, so I think to start off here, Starbucks is a company that I think you guys should all know about now. I really like as a company. I have an entire playlist dedicated to the stock. Starbucks actually recently just reported their earnings and I made a video on it, but essentially Starbucks had a really strong quarter. They were dealing with some short to medium term issues, which I talk about in the video, but overall their long-term business projections are doing just fine. They have insane growth ahead in China. Now, if you're squeamish about investing in China and you'd avoid stocks like Alibaba just for the purpose of being in China, this probably isn't the stock for you, to be honest. This company has a lot of growth ahead in China, and a big part of its future growth and shareholder returns are going to be through China. So that's one thing to keep in mind. But Starbucks' brand is currently at an all-time high. Starbucks is a very profitable business. They're actually using AI technology, which I'm sure excites some of you guys, to have a more efficient business at the end of the day and get more customers in and out very quickly. Overall though, efficiency is a big thing for Starbucks that they've really improved on in the last couple of years. Starbucks obviously is avoided by a lot of people because it's a coffee company, and a lot of people just morally don't think that people should be paying $5 for coffee. Well, believe it or not, people are addicted to Starbucks' products. Speaking from experience, Starbucks utilizes their mobile app very well, and it essentially acts as a bank. Whenever people buy gift cards or load money onto the Starbucks app, Starbucks can use that money that the customer loads onto the app, basically interest-free as a loan. They can use that money to have a competitive advantage over their competitors. They can essentially make investments, pay juicy dividends, do share buybacks, basically interest-free, and have a step up ahead of their competitors. I would recommend you check out my Starbucks playlist for me to go really in depth on the company, but right now Starbucks is trading at $92.99. They're currently trading at a historically high dividend yield of 2.45%. For my dividend yield investors, it's kind of getting interesting. It's getting up there. Starbucks' earnings per share growth has been very strong. You can obviously see the only dip they've really had was in 2020 when they were forced to close down their stores. And they made it through 2020 just fine, so I believe this is a very good company if you're going into a tougher economic time. We saw in 2022, even with inflation and people spending less money on discretionary items, people are just fine going to Starbucks. I'm telling you guys, we're not in a caffeine bubble. People are addicted to these products, and Starbucks has seasonal products too, so they have reoccurring revenue streams. For example, the Christmas drinks, the fall drinks, etc., and now even Valentine's Day drinks. Starbucks' CEO Laxman Narasimhan is amazing too. I'm a huge fan of him, and if you ever listen to an interview with him, he is very charming and he makes you want to buy the stock then and there. But overall, looking at Starbucks' free cash flow, which is the most important metric when looking at any business, it's really the end of the day result, especially if you're a dividend-focused investor. Dividends are the result of a company's free cash flow. Starbucks' free cash flow has been a little inconsistent, obviously because of 2020, which they can't control. But recently, that consistency has been growing. They have a 1-year growth rate in the free cash flow of 44.45%, then they have a 10-year growth rate in the free cash flow of 10.68%. Now, I would pay more attention to the 10-year growth rate, as obviously the 3- and 5-year growth rates are going to be a little skewed because of 2020. But I do think right now that a big reason that a lot of investors are not too enthusiastic about investing in Starbucks and they're trading at a bit of a discount, obviously some of the short-term issues, but the lack of consistency in the earnings and free cash flow. This is due to 2020 and some other things that happened to them, but overall, I'm still very bullish, and you're going to see consistency in the next 3 to 5 years, in my opinion. And I think that may add a premium on the stock once they start producing that free cash flow consistency. Moving on to Starbucks' dividend growth, they've had very impressive dividend growth the last few years, but there are some questions on how sustainable that growth is with the current payout ratio. Now, as I mentioned, there's a lot of growth ahead in China, so assuming that goes through, the payout ratio probably will decline and the dividend growth will be sustainable. But looking at the current dividend growth rates, they have a 3-year growth rate of 8.2%, a 5-year growth rate of 9.63%, and a 10-year growth rate of 15.93%. This is really high quality dividend growth at the end of the day, and it's something that Starbucks is really known for. Starbucks' dividend growth has been very quality, but the yield is also something to keep an eye on as well with the current low prices. Looking at the current free cash flow payout ratio, they currently have a free cash flow payout ratio of 66.17%. It's a little high for some people, and the EPS payout ratio, which I pay less attention to just for accounting purposes, is 58.96%. Overall, though, the free cash flow payout ratio, in my opinion, is more important because it's an actual indicator off of the business's profits and cash flows. As the free cash flow grows, though, I would expect this free cash flow payout ratio to go down, and the consistency metric too. Starbucks also does an amazing job at rewarding shareholders through share repurchases. Now, this essentially gives you more equity in the company over the long term as the company buys back shares. And especially as Starbucks trading at a bit of a decline, they are buying back shares right now, and historically have. So that's a positive thing to see. Overall, though, for Starbucks, they have an amazing brand, great pricing power, solid dividend growth, and good repurchases. I'll be looking to buy Starbucks if it drops below $91 or $90. I think that'd be an amazing price to add it at. Starbucks is a core holding in my portfolio right now, and I plan to add more. February's theme for stocks we're looking to buy is just amazing, iconic brands, and of course, I'm talking about Nike stock ticker NKE. Now, when I'm talking about companies that I don't think are currently trading at all-time highs and are actually looking appealing value-wise, Nike is currently at the top of my list in my portfolio. Currently, Nike is trading at $100.71 as an actually underrated dividend stock in my opinion. Currently, Nike is trading at a dividend yield of 1.47%. Nike stock has been a bit of a funk. They had a giant hike in 2021 and really haven't recovered since. Now, you could say that was an illogical price jump, and everything was kind of trading out of its boundary then, but Nike really hasn't recovered. Some would even say that Nike isn't at fair price still, and it still has a crazy premium on it. Anytime you have a business that can have a $20 pair of shoes, put their logo on it, and sell it for $250, that's a business I want to be a part of. Currently, Nike is one of the smallest positions in my portfolio, but recently I added some more this fall when it was at $90. Nike has some really quality free cash flow growth, recently having a 1-year growth rate near 12%, a 3-year growth rate of 51.81%, which obviously is a little inflated due to 2020, a 5-year growth rate of 5.36%, and a 10-year CAGR of 8.95%. Very high quality free cash flow growth, and consistent as well. In my opinion, I think Nike is an underrated dividend growth stock. Currently, Nike has very quality dividend growth. Recently, they just hiked at 8.82%. They have a 3-year growth rate on the dividend of 10.4%, a 5-year CAGR of 10.96%, and a 10-year CAGR of 13.42%. Now, let's take a look at the payout ratio to see how sustainable that dividend growth is. Currently, looking at Nike's free cash flow payout ratio, it is sitting at 41.3%. That's sustainable right now, and especially considering that they've hiked it pretty much 10% for the last 3 years, that's really quality growth. And looking at their EPS payout ratio, currently it is 39.68%. So they're sitting at a payout ratio at around 40%, and I think that's pretty solid. Now, Nike recently did have a layoff of some workers and issued some short-term warnings when it comes to their business. I think long-term this could lead to some value with Nike stock. But unfortunately, Nike is one of those companies that always trades at a premium, simply because of its brand. And before we get on Nike's valuation, I want to talk about their share repurchase as well. Recently, they bought back 2.55% of shares in 2023. This could be a potential indicator to us as shareholders that Nike stock, their management, they think that it's undervalued right now. But Nike is rewarding the shareholder in more ways than one, and that's another positive thing to see. The big thing with Nike, though, is really when you buy it, though, in my opinion, because I was dumb. I really didn't understand anything about investing when I first bought my Nike share, and I bought it at $140 when it was way overpriced. Looking at their price to earnings chart though, obviously PE isn't everything. We can see historically they traded a really high PE ratio. So with those companies, it's obviously kind of important to look at why they're trading at that kind of a premium. For Nike, it's obviously their brand. But right now, they're sitting at a 26.57 PE ratio. I think that's actually solid, but me personally, where I'm going to be looking to buy Nike is around that $90 range. They're really intrinsically kind of overvalued when you look at like the DCF models and all that stuff, but overall, historically, they do trade at a premium. So me personally, if Nike falls to $95 or $90, I'll probably be adding in small increments. But overall, I'd like this as a smaller to medium-sized position long-term in my portfolio. I think Nike's brand is really good, but it does matter when you buy the stock here. Alright, those are the two stocks I'm going to be personally looking to buy. I think these are fair value or undervalued, potentially even for Starbucks, and if they do fall, I will likely be loading up in my portfolio. I want to thank you all for making the video. If you want to see my buys, sells, trades in real time, rather follow me on Twitter at Ryan Danglershire or join the Discord link in the description. You could also check out my portfolio updates, which I post every month, and I just posted one. Thank you. Check out the Do Dividend Stocks Not Drugs merchandise. Smash the like button, subscribe, and Do Dividend Stocks Not Drugs. Have a good one.